We'll all edit it back, of course. Microphone's on. They are on. Okay. Ready? Yes. Good. Go. Welcome to Western Financial, where we're helping you plan for your future today. I'm Deborah Montgomery.
And I'm Damon Montgomery.
And I said, when you say your name, we're going to start talking. Today, we're going to talk about life insurance.
Oh.
We can say welcome to Western Financial. Ready?
Mm-hmm.
And I'll say the slogan. Ready?
Mm-hmm.
1, 2, 3, go.
Well,
To Western Financial, where we're helping you plan for your future today. I'm Deborah Montgomery.
And I'm Damon Montgomery.
And today we are talking about life insurance. Right?
Yeah.
You got to take it from there. All right. It's all right.
Good.
Ready? 1, 2, 3. Welcome to Financial, where we're helping you plan for your future today. I'm Deborah Montgomery.
I'm Damon Montgomery. And today we're going to be talking about life insurance. Okay. Life insurance is I know it's a touchy topic. Oftentimes we think about death when it comes to life insurance. But I think it's important for me to give you some statistics first. Okay.
Okay.
What we want to do is just get an idea of how many people are actually uninsured, and particularly in the African American community.
That's a good topic.
Okay.
Yeah.
So the statistics I have: 46% of African Americans don't have life insurance.
Wow.
Okay. Yeah. So yet we're trying to do other things. We're trying to purchase homes. We're doing other things with our money. Yet, if something happens, we're not prepared. Okay. You don't want to be a statistics of a person that, or one of the statistics of somebody that's unprepared. Okay. Too often we hear about people that have passed away and don't have life insurance.
A lot of people, okay, not just people, but like celebrities included.
Yeah, yeah.
Celebrities, all that.
Yes.
Your princes and your Aretha Franklins.
Right.
And, you've got all this. You work so hard for all of your life and to develop all these assets, and then when it's said and done, where are you leaving your assets to?
Exactly. Okay. So, I mean, you don't want to be a burden to your family, in death. Okay. Unfortunately, you're gone. Okay. Um, but in that, you don't want that burden to be passed on to your family, because now, it's going to cost them extra money to bury you, to have a funeral for you, to have a plot for you. So, one of the easiest things that you can do is get life insurance.
Wow, now that's a West Oak wisdom. That's some West Oak wisdom. WOW. Wow.
Yes, yes. So West Oak wisdom moment.
Yep.
Mm. So, I mean, looking at your costs, I mean, it's like an additional tax on you, okay? To have to pay for somebody's funeral, okay? And I'm saying this from the knowledge and the wisdom of dealing with people who I talk to, and they tell me, "Well, I had to help bury my cousin. I had to help bury my grandmother. I had to help bury," and this is because people don't have life insurance, you know. Um, so not only is life insurance good, protective, but you're also talking about the ability to pass wealth down to the next generation.
So basically, you're saying like life insurance is an investment.
Yes.
Okay.
Life insurance can be an investment. Okay. For instance, let's take a whole life policy. Okay. Now, basically, whole life allows you to accumulate cash value. Okay. Cash values are money that accumulates in your life insurance policy, along with of course, your death benefit. So when you make your premium, some money goes to your death benefit, but some goes to your cash value account. Okay. It's normally the general account. It starts to accumulate in about your third year of having the policy. You start to accumulate cash value. So not only can you use that money, you have your death benefit, you have the cash value, but you can also borrow that money as well. Okay.
Yeah. And that extra money that you're borrowing could possibly open a business or
Yes.
purchase other properties or, pay for education.
Yes.
You're able to tap into that. Wow.
And it's different types of policies out here now. Now, let's say you are just getting life insurance. Let's start off with a young person. Maybe somebody 25, 30 years old. Okay. A lot of young people don't really value life insurance because they feel that they don't need it.
They're gonna live forever.
They're gonna live forever.
Yeah.
So oftentimes that's something that they let go. But a young person actually can invest in life insurance. Here's the thing: it's cheaper if you're young.
Nice.
It's cheaper. So if you're young and you get, let's say, a term policy, okay, all right, then the life insurance, the premium may be $10, $15 a month.
Wow, very affordable
Very
considering gas and Uber and DoorDash and everything else that young people, depend.
Yes.
So it's very affordable. Very
Yes.
affordable.
Very affordable.
I say, for the most part, if you set aside X amount of dollars, this is how, and I tell you all the time, this is what I can afford. Okay, I can afford $25 a month. Sight unseen. $25. I'm okay. It's not the end of the world. It's gonna be what it's gonna be. So I can afford $25. That's how much life insurance I would probably start out with. Like that's what I started out with. And that's how I approached it when I, talked to you about life insurance. It's like my affordability factor could, do I want $1 million policy? Of course I did. But I can't afford $1 million policy or $2 million policy or whatever. So for the most part, the hundreds of thousands that we do have, it's affordable. So, I started out my first policy by saying I could afford $25. It was able to get me, was it 100? No, 50? I think it was 50,000 or something like that. It was enough, enough to be able to sleep at night. And that ultimately is what you're trying to do, I think. I just want to be able to sleep at night knowing that should anything happen to me, as we all know, we're not promised tomorrow, should anything ever happen to me, that there's less of a burden that I'm putting on my family. You, the kids, the whole nine. So, being able to, leave you guys something was ultimately in the beginning how I wanted to set everything up. And then be able to build from there. Obviously, with getting better jobs or, I'm commission only for the most part, getting lump sums of money is easy for me to, purchase more insurance. So it all depends on I think your income, your affordability factor of it, right, what you can afford. I also just want to talk about, like, we're talking about purchasing a policy like through us as independent, agents or agent. Um, your job. So a lot of people, when I'm talking to some people, they're like, "Oh, well, I already have life insurance," and I'm like, "Well, where is it?" There's from my employer. My employer. So talk a little bit about employer life insurance. Why should people get that extra policy? Because they're already covered with their job.
So, life insurance through your employer is considered group insurance. Okay. Basically, your job has what's called a master policy, and then everyone, the employees, are able to get insurance at a very, very cheap rate. Um, and most of the time, the insurance is basically a percentage of your salary, the salary that you can make. Okay. If you leave the job, okay, you may get an option to take the life insurance with you. It's going to go sky high because you're no longer under that group policy.
Gotcha.
Okay.
Gotcha.
Or the life insurance will just disappear and you won't have it.
So
Okay.
when you transfer from job to job,
Right.
you're not carrying that life insurance policy with you.
Right.
But if you choose to continue that policy, the rate may increase because you're not in a group,
Right.
like a bundle kind of situation. You're an independent person, purchasing a policy.
Yeah. So,
and then your rate might change on there. So
right. Right.
yeah.
So, those are just the two factors why you basically you want to get your own policy. Now, here's another one too. Okay, all right. I deal with a lot of first-time home buyers. Okay, as well as a financial advisor. I'm a housing advisor as well. So, if someone comes to me and they say, "Well, I want to buy a home, purchase a home," okay, all right. You want to buy a home for 150,000, 200,000. Okay, all right. Now either they don't have life insurance or they may have life insurance through their job. Okay. But if something happens to you, that home is not going to get taken care of.
Mm,
Okay.
that's good to know.
Yeah.
Wow.
So, I mean, if you are a family and, something happens to you or your husband, the husband or the wife, so now we're talking about that salary no longer being in the home. Okay. So not only are expenses going to have to be covered now, but your home also is going to have to be paid for. All right. There is insurance out there that you can get. Term insurance that you can purchase. Um, you know, for the home, but to not have any insurance at all that's going to cover the amount of that mortgage. Let's say you have a car or two car payments. You're going to have your other bills, credit cards, everything. So, this goes into what's called a financial needs analysis. Okay. I mean, if you want to do it correctly, this is the way to do it. Okay. So, not only that, but if I'm getting life insurance for a husband, and then what I have to do is calculate probably maybe 6 to 10 years of their salary as well in the insurance because that salary is going to be missed now. It's gone. Okay, that salary is gone, and you may think at the time that it might be enough money to cover your expenses and take care of everything else, but you know, um, if you don't have enough life insurance, okay, to have money to not only live off of, but also, excuse me, have money for the future.
Okay.
Okay.
So wow, that's a lot of information. Um, some good West Oak wisdom to go by. So what we're going to do is end this segment for the most part, and look forward to our other series and other informational videos that we're going to start posting. But as of right now, we'll wrap this one up with Try not to be a statistic. Try not to be a part of that 46% and not having anything be covered, for your loved ones, for your assets even. You want your assets to be appointed and accounted for to where, it'll be with what you want to do while you're here on earth,
Yes.
while you're here,
Yes.
So,
And we'll talk some more about, one of the topics that we'll talk about later is estate planning.
awesome.
Life insurance and estate planning, they go hand in hand.
We got some good
Yeah.
series coming up,
Yeah.
so there'll be a lot of information. So just
Yeah.
be able to just click and sit back, listen with a cup of tea, and hopefully you'll learn something. But we definitely are trying to help you plan for your future today.
Yes. God bless you. And I'll see you next time. We'll see you next time.
See you next time. All right, let's take a look at that.